Welcome back to Squawk Box this morning. Elon Musk calling for the European Union to be abolished. This after the bloc fined his social media company X $140 million. That followed Friday's decision by the European Commission to hit X with the fine after a 2-year investigation into the company under the EU's Digital Services Act. Now, last week, the European Commission had said that infractions by X, which included what it called the deceptive design of X's blue check mark for verification, a lack of advertising transparency, and they say the failure to provide access to public data for researchers. Secretary of State Marco Rubio calling the fine an attack by foreign governments on all American tech platforms. So we'll see whether there is backlash from the U.S. government about that.
All right, coming up, we've seen this movie before. Saw on Twitter they said, ask a person if they know Europe's leading tech company. Ask a person on the street. Some people, very small minority, can come up with ASML, and then that's it.
ASML is the top. Spotify.
Spotify's number 2.
But you're a leading financial journalist. You're able to come up with that
loud and proud.
Yeah, you're able to say that on the tip of your tongue. But most people would be like,
Arm holdings.
Do you like cricket?
Arm holdings. Come on, that's pretty big.
It is, but think of when they've got plenty of other problems. But I think Elon, never hyperbolic. This fine, we really should. The entire
when
EU.
Did SAP
the entire EU should be gone. The EU should be gone.
Yeah. When did SAP fall from the top spot? Has that been a long?
Oh, I would think a bit. I mean, ASML, I do think, is such an important sort of component part of the whole.
I wonder what's really behind it. What they're talking about, the blue check mark. I mean, you can go to jail for a meme in certain countries.
I think in Germany.
Yeah, go to jail for a meme that they don't like.
Chip maker reportedly planning to triple its production. Our Deirdre Bosa has more on all of that in today's Tech Check. Happy Friday, Dee.
Happy Friday. Hey, guys. So Beijing, it's rushing to create domestic lock-in before NVIDIA can re-enter this market. More threads. That's the first in a quartet of Chinese AI chip startups known as the Four Dragons to go public, and it surged more than 400% on its debut. Bloomberg, meanwhile, reports that Cambricon, this is part of China's first wave of accelerator companies, reporting that it is planning to triple its output of AI chips next year. Now, together, these companies represent a coordinated state-backed push to build parallel infrastructure that isn't necessarily better than NVIDIA or what the U.S. has, but good enough, and this is key, Chinese-controlled. Now, the More Threads founder reportedly put it this way to Chinese state media. He said, computing power is state power. The idea that whoever controls the silicon base controls the AI era. Now, that idea, it's also gaining ground here in the U.S. as well, though lighter and more indirectly. Washington, for example, took a 10% stake in Intel and hinted at more deals. There's also a journal story this morning that the Trump administration is in talks with Masayoshi Son and SoftBank to build federally owned AI infrastructure parks. Now, the latest accelerations in China's chip ambitions, and it feels like they're moving faster than ever, this could push the U.S. to move faster too, or risk a future where NVIDIA and American tech at large starts to really lose market share to a domestically protected Chinese ecosystem and maybe beyond companies or countries that China is allies with. But guys, even after More Threads' massive IPO pop, it is still worth less than 1% of NVIDIA, and it is nowhere close on performance. Cambricon, meanwhile, despite that product roadmap, it is still far from competing with NVIDIA. So China's chip industry, it is being propped up by artificial demand. That is key here to know, for investors to know, but it's also important to know that we've seen this before with DeepSeek and Chinese AI open source models. They can close the gap faster than expected, and when they do, markets can recalibrate very quickly.
Here exclusively at the Reagan National Defense Forum is L3 Harris Chair and CEO Chris Kubase. Chris, it's great to speak with you.
Great to be here. Thank you.
You know, back in January, you were the CEO of a defense prime that came out and said, hey, we have some ideas on how to change acquisition and move more quickly and deliver more to the U.S. government. And now here we are. One of the big themes this weekend is going to be Arsenal of Freedom because the Pentagon is looking to do just that, overhaul the procurement process. Your thoughts?
Yeah, well, it's long overdue, and I applaud the department for finally getting this document out. They did it in a pretty timely manner, all things considered. Last night the national security strategy came out, and what it continues to say is that the threats facing the U.S. and our allies are increasing. So the entire defense ecosystem has to really get on a wartime footing. And I think this transformation at the Department of War is a big step in the right direction. It's very similar to what we did at L3Harris about 2 years ago. We've started to transform ourselves, focusing on AI, focusing on affordability, accountability, innovation, and speed. So there's perfect alignment. I particularly like the focus on the DOW and industry jointly investing to increase capacity. I believe capacity in and of itself is a deterrent. And the last piece will be the multi-year contracts. And I look forward to the DOW starting to award multi-year contracts so that we can have long-term agreements with our supply chain and really empower the defense industrial base to support the warfighter. So exciting times.
For years now, we've been having conversations about solid rocket motors and what it's going to take to produce more, replenish stockpiles. We're just having the conversation about munitions with RTX's CEO, Chris Callio. Aerojet Rocketdyne, it's one of your businesses, one of the biggest solid rocket motor producers out there. How quickly can you produce and ramp that production?
Yeah, we bought that company about 2.5 years ago. It was not in great shape. Strategically, it was a great acquisition, but it lacked leadership, it lacked investment, it lacked innovation, an outstanding dedicated workforce. And in a little over 2 years, we've completely turned that business around. We're actually delivering on or above schedule or ahead of schedule on most of the contracts. We've been investing hundreds of millions of dollars to increase the capacity. So I think when you look at it now financially, just from that aspect, it's easily tripled in value, and we're well positioned to grow along with the Department of War as munitions double, triple, or quadruple in the years ahead. So exciting times, and we're ready to go.
We see more startups coming into the space, particularly around things like solid rocket motors. How are you navigating that?
Yeah, look, we've been supportive of new entrants and startups, actually, going back several years. We have dozens of partnerships with some of the new entrants that are well known. And as of today, we have equity ownership positions in over 70 startup venture-backed companies. So we're trying to help these companies get through the valley of death. From our perspective, we want to get their technology into our solutions so we're quicker, more innovative, more affordable. And then, down the road, if these entities have some sort of exit strategy, we share on the upside and then can continue to reinvest in the business. So it's exciting times, and proud of the progress we've made.
Massive, massive opportunity across the industry and arguably beyond is Golden Dome. Investors are very focused on what that's going to mean for L3Harris as well. You're starting to hear about maybe some contract awards. I think there was a headline about 1,000 folks selected for parts of Golden Dome earlier this week, but we still don't have a lot of those awards or details. What does it mean for the company?
I think it's a huge opportunity for L3Harris. There's a couple aspects, mainly on the satellite. We're very focused on the missile warning, missile tracking. We have numerous satellites in orbit, numerous in backlog, and we're expecting some awards, some RFPs here in the next few weeks. So I think we're well positioned. On the solid rocket motor or the munition side, large solid rocket motors, PAC-3 THAAD, that's right in our sweet spot. So we're excited. It's only been several months since General Gutlein was appointed. They rolled out the architecture. So things are moving at a fast pace, and we're excited about the future.
And partnering with government, what does that look like with this administration and beyond?
Oh, I mean, that's the business that we're in. We view ourselves as the commercial defense technology company. We think we have the right people, the right infrastructure, the right technology, and the right culture to succeed. We're well aligned. They're going quick. We're going quick. There's more and more focus on commerciality. That's going to be the word of the day tomorrow here at Reagan. I'm pretty confident. And we've been working under a commercial business model for over 20 years. We've invested $2 billion alone just on software-defined radios. We've sold 700,000 to the DOW, 500,000 internationally in the last 20 years. And these are year-to-year competitions. So I'm a big believer in the commercial business model. It's about 20% of our revenue. I'm hoping it's more. I think it's the way of the future, and that's what we're going to need to do as a nation.
Hey guys, I hope you all are doing well today. Big development just dropped around the NVIDIA, US-China chips policy and the next phase of the AI build out. So let's straight into it. Late yesterday, multiple reports confirmed that US regulators are moving toward approving the NVIDIA H200 chip sales to China. Shortly after that, the president publicly stated that he had spoken directly that with China leadership and that H200 export will be allowed under the national security supervision. This supervision is a twist. A 25% revenue shares from those China sales will go to the US government. This is a major shift in the policy for the most of the year. China revenue has been fully wiped from the Nvidia guidance and from the analyst forecast. Wall Street has been modeling Nvidia as its if China contribute zero, if even a portion of that market reopen, it immediately introduce a new revenue stream that nobody is pricing it right now. Before early restriction, Nvidia has indicated that China could have contributed roughly $8 billion per quarter from prior generation AI chips. The H200 is more powerful and expensive product. Even after accounting for a government 25% cut, this is still represent a meaningful upside scenario versus expectation today. That said, it's critical to understand the risk on other side of this trade. Even if the US allow the exports, China may not fully embrace the H200. Chinese media has already criticized the decision and domestic chip development inside the China is accelerating fast. Some estimates now project China internal AI chip production could grow fivefold by 2028. So the real test don't be policy approval; it will be actual demand. At the same time, the political uncertainty remain. A pending Baptistan bill could be a still free exports of both the Blackwell and H200 chips for up to 30 months. So while today a new opens a door, that door is not yet permanently secured. Now shifting to a different but equally important development. Report indicate that NVIDIA and SoftBank are exploring an investment into a skilled AI robotics focused foundation model company valued around $14 billion. That fits perfectly with that I've been emphasizing for a month. Robotics and physical AI represent NVIDIA next massive growth frontier. We are moving beyond the AI that only lives on a screen. The next phase of the AI revolution is about machines, machines acting in the real world, factories, warehouse, logistics, humanoid robots, and autonomous systems. NVIDIA already dominates in this entire stack. GPUs for AI training, Omnivores for stimulation, and the real world testing. AGX platform for real time on device decision making. And this is exactly why the NVIDIA leadership continue to describe physical AI as a multi trillion dollar opportunity. On the policy front, there is also a movement toward a single national AI regulatory framework in the US. This will be replace the current state by state fragmentation that is extremely important. 50 different AI rules book across the America will be severely slow innovation. Unfined system gives US companies massive strategic advantage. This week is also packed with important earnings. Oracle report Wednesday and Broadcom reports Thursday. Both will offer a key insights into AI infrastructure in spending, demand, and custom silicon trends. Expect volatility around the both. Zooming out to the long-term Nvidia picture, I still strongly believe that most analysts are underestimating Nvidia multi-year runaway. Near all the models stay logged on the data center story alone that unstable. But it misses that what's the coming next. We are looking at the multiple demand waves stacking on the top of each other. Agentic AI demand driving sustained compute growth into a 2026, physically accelerating into the 2027 and beyond the Sovereign AI and national compute build-out. Eventually, the quantum class integration with GPUs. NVIDIA product roadmap also provide a rare long-term clarity. Blackwell Ultra ramping now, Rubin launches in 2026, and Rubin 6 later in 2026. Rubin Ultra in 2027 and Phenomenon in 2028. Jensen continue to project 3 to 4 trillion in a global AI factory construction by 2030. That implies sustained demand not just for chips but also power, networking, cooling, and full stack software platforms. So when people talk about the bubble, I continue to disagree. Bubbles come from when supply overwhelms and demand. Today, the demand is overwhelming and supply is constrained. GPUs are constrained, power is constrained, and data centers are filling the moment capacity goes live. The structural demand are not speculation. Bottom line, even without China, Nvidia is growing extraordinary pace. If the China meaningfully reopen, that become an upside, not a requirement. Add in robotics, physical AI, and so reason AI and the future quantum acceleration, and I still believe NVIDIA valuation ceiling is far higher over the coming years. As always, stay disciplined, ignore the emotional noise, focus on positioning, non daily price swings. With that, I hope you all have a great rest of the day. Drop your thoughts on NVIDIA in the comments and hit the like button if this helped, and consider subscribing. It's free and you can always change your mind later. Thanks for watching. I will see you in the next video.